Ladies and gentlemen, good day and welcome to Navneet Education Q1 FY2024 earnings conference call hosted by Prabhudas Leeladhar. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Jinesh Joshi from Prabhudas Leeladhar. Thank you, and over to you, sir.
Good morning, everyone. On behalf of Prabhudas Leeladhar, I welcome you all to the 1Q FY24 earnings call of Navneet Education Limited. We have with us the management represented by Mr. Sunil Gala, who's the MD, Mr. Kalpesh Dedia, CFO, Mr. Rumi Mistry, who heads the IR team, and Mr. Sanjeev Shah, Joint MD of Navneet Future Tech. I would now like to hand over the call to the management for opening remarks. Over to you, Sunil Bhai.
Thank you, Jinesh. Good morning and very, very warm welcome to everyone today. Apart from the names Jinesh mentioned, we also have our investor relation advisors together on the call. Hope you all have received our investor presentation by now. For those who have not, you can view them on the stock exchanges and the company website. So let me start today the call by giving you all the brief overview on the National Education Policy, NEP as it is called, and how it will bring a host of opportunities to Navneet's business. The policy brings numerous advantages to Navneet's publishing business as it emphasizes on play-based learning and an integrated curriculum framework. Education policy will bring in significant demand for updated teaching materials, of which Navneet can seize opportunities by providing innovative, up-to-date syllabus books and aligned with the NEP guidelines. NEP also offers a favorable environment subsidiary offering CBSE textbooks to that 3.3 crore as compared to 7.6 crores in Q1 23. Let me clarify here that usually for Indianica business, Q4 is the strongest quarter on account of back to school for CBSE students. But in FY23, we had witnessed a follow-on pent-up demand even in Q1 FY23, as many schools reopened later during that time on account of COVID-19. You all may recall that last year FY23 was the first post-pandemic period. We firmly believe in our capacity to grow CBSE business, as there is huge potential to cater to more number of schools and existing schools with more number of titles. As I have been telling earlier, more and more CBSE schools are opening in the country, and many SSE schools are also getting converted to CBSE. So overall for FY24, we believe the publication business could grow in mid-teens, which is marginally lower than what we had anticipated at the start of financial year. This is because we have increased prices on some of the publications due to paper price rise, which has resulted in slower offtake in end markets. We expect more clarity to emerge in current quarter, and we will accordingly come back to you with a more firm guidance on our next call. Now I come to the stationery business. First I'll speak about domestic. So our domestic business revenue also, as you might have read, grew by 22%. Due to inherent nature of the business, there is always a 2-quarter lag in procurement of raw material and sales realization. Hence, the margins in this business were affected due to the escalation in raw material prices, which was procured in the previous quarters. However, to gain market share, we made a strategic decision to absorb some of the cost increases and not immediately pass it on to the customers. Fortunately, in the current quarter, raw material prices have started to decline, and coupled with an improved demand scenario, we are confident that the company will be able to achieve a revenue growth more than 15% in FY24 compared to FY23 with an enhanced margin profile. Now I will speak on exports. Our export stationery business revenue grew only by 3%. One of our product category has been evaluated for application of anti-dumping duty in the US, and as a result, orders from this category were not received during Q1. This product contributes 8 to 10% of our export revenue. We have been taking appropriate steps, ensuring a proactive approach to address the situation. However, this loss was offset by the growth in other existing products. As an Indian player in the export market, our brand equity is exceptionally strong, primarily attributed to our commitment to providing quality products and services. To further expand in export markets, we have devised a strategic plan to introduce new offerings beyond paper-based products and focus on value-added products. So that complete on our standalone businesses. Now let me give you some guidance on our EdTech business. Business which is under Navneet Future Tech. The business is moving gradually, and our efforts are steered towards growing this business more meaningfully and rationally than today. Therefore, the board of directors have guided to review our EdTech portfolio and strategy considering the current EdTech scenario. We will present a comprehensive strategy to the board very soon. So that is it from my side. Now I will hand over to Mr. Kalpesh Detia, our CFO, to give you an update on the financial performance. Hand over to Kalpesh, please.
Thank you, Mr. Gala, and good morning to everyone. Hope you all are fine and safe and in good health. Now let me take you through the financial highlights. First, I'll talk about the standalone performance. Our revenue for Q1 to FY24 grew by 15% to 785 crores as compared to 683 crores in the same period last year. EBITDA for the quarter grew by 8% to 223 crores as compared to 207 crores the same period last year. EBITDA margin for Q1 were at 28.4%. PAT for Q1 24 grew by 6% to 158 crores as compared to 150 crores in the same period last year. PAT margins were at 20.1% for the current quarter. Now I come back to consolidated performance. Our consolidated revenue for Q1 FY24 grew by 14% to 791 crores as compared to 694 crores for the same quarter last year. EBITDA for Q1 24 grew by 7% to 209 crores as compared to rupees 195 crores for the same period last year. EBITDA margins were at for Q1 were at 26.4 crores. Our consolidated PAT for Q1 grew by 5% to 145 crores as compared to 152 crores the same period last year. Consolidated PAT margins for Q1 were at 18.3%. Thank you. That's from my side. Now I open the floor for Q&A session. Thank you.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. First question is from the line of Sonal from Bowhead. Please go ahead.
Thank you, sir, for this opportunity. I have a couple of questions. And also I wanted to let you know that, during the call, for a few minutes we couldn't hear you when you were talking about the benefits of new education policy. So maybe at some stage during the call it will be very helpful to all if most my, questions you could repeat the same. Sir, first question is, what kind of growth rate would you expect because of new education policy? And is it fair that it will unfold between 2024 to, 2027 or 28? And what kind of CAGR in publication business in your standalone entity could happen because of that in revenues?
Should I answer? You want to ask more questions together? Let me answer this. Sonal. Yeah. So, with respect to FY24 and thereafter, the growth in publishing business normally will depend which grades our curriculums are changing. As you would know, that contribution of each grade is different in our revenue. But net, I should say that on a CAGR basis for the curriculum change cycle around 4 years, we are very confident that we will grow by 15%.
Per annum?
Per annum, yeah, CAGR, I said.
Sir, secondly, because of this anti-dumping duty, what kind of revenue loss did you have in Q1? And I understand that you relocated some of these capacities to some other geographies. So would you still continue to suffer the losses on account of this product in the next 9 months or no? And would you be able to recoup these sales lost in Q1 in the next financial year because of relocation of capacities?
Yes, as I mentioned in my speech, the revenue from that category was around 8 to 10% of our total exports revenue. And we are very confident that we will be able to recoup these lost sales in next year for sure, because as you also said, because of relocation of facilities.
But sir, would we continue to lose the revenues on account of this for the remaining 3 quarters as well?
No, this was back to school season, and this category normally we get ordered in Q4 and Q1. So now we do not have that order for that category normally.
So what would have been the loss? Would it be like 40-50 crores, or how much would have been the loss?
Yeah, around 40 odd crores.
In Q1, okay.
That's right.
Sir, as the paper prices, you said, have fallen, sir, so when would we see the benefit of that in the inventory for stationery, and when would we see the benefit of that in publication? And is it fair to say that in stationery you'll retain part of these benefits, both in export and domestic, and in publication would you be able to retain the entire benefits? Some light on that would be very helpful.
Yeah, so of course we have to finish the inventory that we already have, which we built over last 4 months. Suppose that the blended cost of paper would, of course, will start going down from this month itself. But we will have to consume the inventory that we have. So maybe from Q3 onwards, we'll start seeing benefits in all the businesses.
And sir, would we be able to retain part of the benefit in stationery and the entire benefit in publication next year?
So entire benefit, I wouldn't say. What we have also
in publication.
seen that
in publication.
In publication, we may have to relook at the incremental prices, because last year was unforeseen, where we saw paper prices going upward of 40-50% in some categories. So If prices really go down drastically, we may relook at reducing the price of our product without affecting our margins.
So you're likely to pass on everything back to the customer? Is that what you're saying?
No. Not everything, but whichever particularly lower grade category of books, means lower standard publications, we may have to revisit if prices go down and remain constant for next one quarter. Then we may relook at the revisiting the prices of the product for lower grades.
But is it fair to say that you'll gain some margins because of this net at the net level, if not the entire benefit?
Yes, normally it has happened in a past history also, so margins will definitely improve because of this. But we have to finally, Sonal, have to see the longevity of the business, and from that point of view, if customers really feel pinch paying higher prices, and if competition also reduces the prices, we may have to reduce some of the prices for some of the products.
And sir, as far as the tech losses are concerned, any guidance for 2024 and 25?
So with technology, as I mentioned, board has guided us to relook at the whole strategy. So board has guided us to review the entire business and strategy, and it will be difficult to guide on the capex spend trajectory for FY24 as of now. Post our discussion with the board, we will come back with a detailed communication on this very soon.
Great, sir. Thank you so much.
Thanks.
Thank you. Next question is from the line of Bhargav Buddha from Kotak Mutual Fund. Please go ahead.
Yeah, good morning, team, and thank you for the opportunity. My first question is on the Indianica business. So I think the first participant mentioned that we missed your comments, initial comments. So if you can highlight what could be the reason for doubling of losses at Indianica, and is it fair to say that the business will be profitable in FY24 as was the case in FY23?
Yeah, so first let me just repeat what I said on NEP, which I believe most of you have not been able to hear properly. So what I was saying is that it will bring a host of opportunities to Navneet business. The policy brings numerous advantages to Navneet's publishing business. Particularly, it will bring significant demand for updated teaching materials, for which Navneet can seize opportunities by providing innovative, up-to-date syllabus books that align with NEP guidelines. So we have been already doing this for many years, rather since inception. So, but this year we believe the type of publications that would be required to implement NEP, Navneet is capable, and that we will always have an advantage over it. It also offers favorable environment for Navneet to grow and develop in publishing industry, contributing to the nation's education goals. So overall, I'm saying the NEP, once it starts getting implemented, it will bring in host of opportunities to Navneet. Now coming back to Indianica. So Indianica, as you know, losses of course have widened, but usually Indianica business Q4 is the strongest quarter that we have seen over last several years. In FY23, particularly post-pandemic, few schools opened very late, and therefore we saw some pent-up demand in Q1 FY23. Therefore, you are seeing lesser revenue in the current quarter. But if we see the history, normally first quarter is in line with FY24 quarter. So last year was a little exception. And lastly, to your question, we are very, very confident that Indianica will definitely be profitable in the current year. Okay. And going forward, and going forward also.
So the second question on the stationery business, you mentioned Q1 and Q4 are the quarters where you are receiving this business for the product on which the US is proposing an anti-dumping duty. So now that Q1 revenue has been lost, what about Q4? Can we get that revenue, or there also will be revenue loss in Q4?
No, we will be able to cater because we have planned in a way that the impact of anti-dumping duty is not there on us. So accordingly, we will plan manufacturing of such products at a different location. So we will not lose on these orders.
Sure. And lastly, sir, any update on your investments made in K12 SFA? How is the business panning out, especially on the SFA front, given that you are extremely excited with the fortunes of that particular investment? So,
SFA, of course, as I had mentioned in the last call, they performed much better than even their projections last year, and this year also they are growing very fast, and they have very, very strong plans to enter in various segments with governments and non-governments. So we are very confident of this investment going forward. I may not be able to share exactly what has happened in Q1, but definitely by every year I would like to give detailed explanation on these two investments. With respect to K12, of course, the growth in number of schools as planned have happened, received good admissions also. So everything is happening as per plan, and we are clearly seeing lots of opportunities in K12 also.
And so what is the last valuation which we've known in K12?
So last valuation was post-money 3,000 crore or 2,950, one of that number. So that was the valuation of that company last year.
And we have 22% stake.
That's right.
Okay, sir. Thank you very much for the updates and all the very best.
Thank you, Bhargav.
Thank you. Ladies and gentlemen, in order to ensure that management is able to address questions from all the participants in the conference, please limit your questions to 2 per participants. Next question is from the line of Amit Ketan from Laburnum Capital. Please go ahead.
Hi, good morning, and thanks for the opportunity. Sir, if you could just explain a bit better on the export part, right? Are these products being substituted by U.S. manufacturing, and what is the case for ADD here? And also, how do you see the risk of other products being brought under this ambit?
So, Amit, time and again, the U.S. manufacturers, when they see lots of imports are taking place across the globe, they file an application with the U.S. Customs. So that has been happening over so many years, and it's not the first time that we have had this issue. Earlier also on notebook category or a composition book category, we had the same issue. So having said that, this is just one of the category, and for that category, we have taken care that we manufacture at a different location and export to the same customers. So overall, this year in Q1, we did lost that business, but going forward, we are going to recoup that business for sure.
Got it. But when you say manufacture in a different location, is this like within India or it has to be in the US or somewhere?
No, it has to be outside India.
But not in the US?
No.
Okay, understood. And secondly, if I look at your publication revenues, we roughly did the same revenues as the pre-COVID quarter of June 19, right? Just wanted to understand how much down are we in volume terms, and how do you see volume growth in the business?
So compared to FY19, we are still down by around 10% in volume terms. And what was your next question?
How do you see volume growth from here on?
So this year in particular, we had some challenges, and because prices of raw material went up so high that we had to revisit the prices, and the target community or the buyers did face some resistance initially. But now that we all know that finally to learn during the year, they will need this assistance. So this year we may grow by just mid-teens, as I mentioned in my speech. But going forward, once new curriculum comes, all these concerns will go away.
And the new curriculum you expect for both Gujarat and Maharashtra to be implemented from FY25 onwards, right? Or do you expect delays there as well?
Yes, no. In both the states it will get implemented. Only grades, we do not know which grades have they decided to implement, which will come to know in 1 or 2 months.
Okay. So this will be reflected in FY25 revenue onwards.
May I please request you to rejoin the queue?
Got it. Thank you.
Thank you, sir. We have our next question from the line of Himanshu Upadhyay from O3 PMS. Please go ahead.
Yeah, hi. Good morning. So my first question was on the publications business. Okay. We were expecting kids moving back to private school from government schools, and hence higher demand would have been there on the publication side, especially for Navneet. Did this fructify in the demand, or what really happened? Because we were expecting this thing that means kids moving back should lead to high volume growth.
It has definitely happened, Himanshu, and therefore we could achieve 20% growth in the current year. That is the main reason. But it is not as expected by us otherwise. We felt more number of students will buy. But overall volumes have increased compared to last year because of the reason that I had mentioned in earlier calls. And therefore we could achieve 20% growth.
Okay. And let's say YOY, how much have the volumes increased and price increase has been? You stated from June 19 it is still 10% lower, but in comparison to last year, how has the...
Yeah, so we have grown by around 11% in volume compared to last year.
Okay. And one more thing. Many of the workbooks and guides would be selling even in Q2, Q3. So you expect the growth should continue, or we can go ahead higher to FY20 numbers in Q2, Q3, or you think that business will remain challenging only or in terms of volume growth, not in the value I am saying, for the financial year?
Yeah, as I mentioned also in my speech, we will get more clarity on how the market is reacting to the price hike in this quarter. So as we speak, we are not much worried on the same, but we will have more clarity during these next 2 months. So, but overall Q2 and Q3, we do not have more sales of guides and workbooks.
Okay. And one thing on the education, EdTech portfolio. See, we had reorganized and restructured that business very recently, okay? And we had stated that our focus would be to B2B sales, not B2C sales, okay? Can you elaborate on what has changed so soon that we are revisiting our strategy? Is there any change in the scope of the business or size of the business, what we were assessing earlier or to now? So some thoughts on that.
Yeah, what we are assessing is first of all, we are doing B2B only And what we are reassessing today is the adoptions in the schools. Once we have good clarity on the adoption levels and the inclination of schools to implement digital technology, that we are reassessing, and that will be we'll have clarity very soon, and which of course will present to the board as well as to all of you.
And one last question.
Sorry to interrupt, Mr. Upadhyay. May we please request you to rejoin the queue as several participants are waiting for their turn.
Okay, I'll rejoin.
Thank you, sir. Next question is from the line of Mr. Prakash Kapadia from Innovet Portfolio Managers Private Limited. Please go ahead.
Yeah. Sir, on India Nika, Q4 generally is the best quarter. So on an annual basis, we should achieve the profitability and sales growth target, right? Is that fair understanding?
Yes.
Okay. And, on the, paper prices, so is it fair to say, high cost inventory affected gross margins in the current quarter? Because, I don't see any adverse sales mix in terms of contribution. So, the gross margin should improve for the balance of the year?
Yeah, as I said earlier, till by the time we consume the high cost material, we may see that little pressure on margin, but we will start getting benefit from Q3 and Q4.
Okay, second half we should see that benefit coming.
Yeah.
Okay. And lastly, on domestic stationery, do we expect the growth momentum to continue? Because we've grown fairly well over the last couple of quarters.
Yeah, so I had also mentioned in my earlier call that we will not grow as last year. FY23 we grew very well. So this year we were expecting to grow 20%, but on a little conservative basis, we are saying we are very confident of growing domestic business 15% plus.
Understood. Thank you.
Thank you. Next question is from the line of Riya Mehta from Equitas Investments. Please go ahead.
Thank you for giving me the opportunity and congratulations for good set of results. My first question is in regards to Indianica. Have we increased the prices there, and what kind of adoption with the K2 kind of category are we seeing for the new syllabus?
Yeah, so Indianica, in this quarter we have not revised the prices. We had revised last year itself. And as far as the implementation of new curriculum, you said, right?
Yes.
Yeah, so implementation of new curriculum was just in grade 1 and 2 in CBSE, for which we already had come out with new publications. And we will see the benefit of this in the Q4 of this year.
Okay, but how are the schools adopting it? Like, what kind of inquiries are you getting for the new syllabus till K2 category?
So, as a practice, we go to each and every school of our contact, more than 8,500 schools. So, we distribute sample copies and try to convince the benefits of our books over others. So, overall, the response has been good, but the real result will come to know when we start marketing in Q3, where we start receiving the orders, and Q4 we get confirm orders. So that will be the real time when we will know the benefit of the new products that we have come out with. But we are very confident that acceptance level will definitely be good because products have really come out well.
Okay. And in terms of raw material for basically publication division, what kind of reduction are we seeing in terms of value?
So from 15 June, it has started reducing. And the major raw material that we use, which is called writing and printing paper, that has already come down by around 12%. And we may see further reduction in paper prices. So going forward, we feel that once the next downward cycle also will come in next 1 month or so, and that should stabilize for this year. That's our belief. No doubt paper industry, they may say that they are likely to increase post December or so, but we are not hopeful that they will increase. Therefore, we believe this year, now onwards, we will have raw material purchased at a much better price than last year.
Got it. And how much price impact have we taken last year in terms of publication? Like how much cover the increase?
So around 15% we had taken price rise last year itself, not this year. So this year we have not revisited the prices, in particular in Q4. So whatever price revisions we had to make, we had done that in Q3 and Q4. So around 15% we had revised our prices upwards.
And what kind of inventory of paper do we keep for raw material, and what is our import domestic mix?
So we hardly import 5-7% of our total requirement, and raw material inventory levels normally we keep for 2 months, and we have always seen that shortening that period always becomes very challenging at times when production is at its peak. So normally we keep 2 months inventory.
Okay.
But again, you have to understand this is seasonal business. So our production cycle starts from October and ends in April. So in those 7 months, we have to carry that inventory.
Right. And my last question was in regards to the stationery segment. So where do you see the growth coming from in the domestic? I understand that international maybe it might remain at similar level or even lower because of inquiries going on. But domestic, where do you see the demand coming from?
Across India. It's not from a particular geography. It comes across India. And we have clearly seen the aspiration to buy a branded product, even in this type of product category, is increasing. And so we are seeing it across India.
Okay, so what will be the sustainable growth?
Sorry to interrupt, Ms. Ria. May we please request?
Just last question. Yeah. What will be the growth levels for stationery business, or domestic and export, if you could give a guidance?
So as I mentioned, 15+% growth in domestic and around 10% growth in exports.
Thank you so much.
Thank you. Next question is from the line of Rakesh Parekh from Rockstar Capital LLP. Please go ahead.
Yeah, thanks for the opportunity. Sir, just wanted to understand how has been the rollout of Gennex B Master Lean, and how are you seeing it shaping up?
So we just introduced our product from 1st of April this year. Initial response has been good. Overall, we are reassessing that portfolio also. And as I mentioned, once we review it properly, then very soon we'll come back after showing it to the board.
But any metrics or something means we can share?
Metrics in terms of the acceptance of product?
Means how many clients onboarded or enrolled or something of those kinds?
I think that will be too specific to ask for by you. So I will avoid that and would suggest that when I come back on the overall strategy, that time we will reveal all the numbers, please.
Okay. And in terms of our ERP for the school, so how many number of schools have we enrolled for the current year?
So, as far as ERP is concerned, it's not ERP, it is a full package that we sell it to the school. So, this year means in Q4 we had received orders from around 150 CBSE schools. And of course, as usual, more than 1,000 SSC board schools had already bought in the current year. It's not ERP alone; it's a full package.
Okay. Got it. Thanks. That's it from my side.
Thank you. Next question is from the line of Sunal from Bowhead. Please go ahead.
Thank you, sir, again for this opportunity. With your permission, can I ask, 4 questions, please?
Yes, please.
Sir, firstly, is my understanding correct that the reason why your volumes were low were from June 2019 was because of 3 reasons? And please help me understand if I'm missing something. Firstly, because the prices increased and there was no change in curriculum, so the competition from second-hand books would have increased, because the gap has increased and the curriculum has remained same for last few years. So there's no need to change the books right now. Secondly, the schools start late, typically in Maharashtra and Gujarat in July and August, and therefore there was no rush to buy them considering the increase in prices. Is my understanding correct?
No, second point you said July and August.
When do the schools start in Maharashtra and Gujarat? Reopen?
Yeah. So Maharashtra schools in most of the parts, it starts in the month of June. And the Vidarbha, as it is called, which is Nagpur and other adjacent 7-8 districts, it starts from 1st July. And in Gujarat, everything starts in the month of June only.
Okay. Secondly, sir, so therefore we are confident that once the course changes, people will have no option but to buy the books, right?
Yeah, 100%. There is no doubt on that.
And therefore, at least in those courses, you wouldn't have any need to cut the prices, right? At least in those curriculums where the classes would change.
Perfect.
Okay. Sir, next question. If I add your export loss of 40 crores to the first quarter numbers of exports, I am seeing a growth of 23%. For your export guidance of 10%, to happen, your growth rate in export business for next 9 months should be only 13%. While you said that, you may not lose any further business because you have been able to address the anti-dumping. So, so is it that, you're expecting a major decline or you're just being conservative after having seen a weak Q1 quarter,
Yeah. No, let me tell you, though we receive orders in Q4 but so normally as a business cycle, what happens, we receive orders in Q4. Not necessarily the buyers would buy in Q4 only. The supplies happens in Q1 also of the next year. And therefore, this year, though we have lost some orders in the current quarter, but various category that we have introduced in the exports business. So with that, we have been able to at least maintain our revenue in first quarter, and going forward, 9 months, we therefore believe that we'll be able to grow at least 10% in the current year.
So, sir, that's what I was trying to understand, sir, that in first quarter, if I add back this 40 crore you have lost, because this is not a permanent loss, this is 1 year loss, right? 1 quarter loss.
Right.
Your growth rate in exports should have been 23%. Now, if you have to meet your full guidance of 10% for the full year, it means then your next 9 months growth should be at 13%. So as compared to a normalized 23% growth in Q1, your growth rate is falling to 13% 9 months. So I'm trying to understand, you're being conservative or you would actually expect the growth rate to be 10% for the full year?
No, from where did you arrive this 23% growth, Sonal?
Sir, if I add 40 crores to Q1 numbers for your export business, then your export sales would have grown by 23%. Is my understanding? Maybe I'm doing a mistake.
Yeah, that's right.
So, but for 10% guidance, it means next 9 months should grow only at, 13% compared to this 23% normal growth,
I agree, but the loss of this business of 40 crore may not come back in the current year. The sale will happen in Q1 next year.
Not in Q4. Okay.
No. We will receive orders in Q4, but finally sales will happen in Q1 next year.
So, I see. So total loss for the year would be what, like 50, 60 crores?
Max 50 crore.
Okay. And sir, structurally, what kind of growth rates would you expect in export business? And, let's say FY2023-24 were abnormal for, paper prices being at lifetime peak, In a normal state, what is the range of margins would you expect at EBIT level in your stationery business, let's say in FY25 or in any normal year?
So, like earlier years, in export business, EBIT margin around 70-odd% we are very confident of, which got reduced in the current year because of the paper prices. So we are very, very confident once paper prices comes down and stabilizes, we'll be able to achieve back that margin. Only in this year, because of the inventory that we are carrying, we may see little lower margin compared to normal earlier years. So net, going forward FY24 onwards, we'll come back to the same margin profile.
So whatever you were making in 2020 kind of margins, you should be able to make
yes.
In 25 also, assuming 25 is a normal year.
Yes, please. Yes, please.
And so structurally, what kind of growth rates do we see in our export business, not from 1 year perspective, but let's say from a 3-4 year perspective?
The type of orders that we are, inquiries that we are receiving, not only for paper stationery, but various other stationery products, we are very confident that we will achieve minimum 15% growth year on year.
Thank you so much, sir.
Thank you. Next question is from the line of Neeraj Mansinka from White Pine Investment Managers Private Limited. Please go ahead.
Thank you for the opportunity. Just wanted to ask a question on the LMS. Can you, obviously, sorry for being repetitive, can you tell us how the scale-up will happen for the next 2 years and how your market share you expect to evolve in that business?
You are asking about LMS?
Yeah, the top tech business that you have.
Oh, my friend, I request Neeraj that just wait for some time. Overall, we are studying the as I said, market acceptance, market adoption, usage in the classroom, whether it really benefits, or that study is going on full swing. So just wait for 1 or 2 months. We'll come back with full clarity in the next call or maybe a little earlier.
Okay. So the reason I'm asking is this is the only business which is not for the investments. If you see from a business perspective of your company, you have publishing and stationery doing, obviously they're old businesses. The growth that may come in longer term will be from Indianica and Future Tech. Am I right? The larger growth, right?
Yeah. So, be it, I should rather say that be it CBSE business or SSE business, finally, the core business of paper that will continue to grow for sure, and the digital or the technology will aid further to the publishing business. So overall, everything will go hand in hand.
Okay. So, and on the, can you give also some clarity of how the Indianica business will evolve over the next 2 years, like from here? I understand the syllabus change will happen and CBSE business will come to you. But any thought process of how large can the revenues become for the business for you?
So overall, CBSE market, textbook market for private publisher is in upward of 4,000 crore. So we want to have maximum pie from that. So accordingly, we are planning more and more geographical growth. We already have all the publications that are required. So more and more geography year on year we will try and increase. So that way we see good opportunity going forward. So again, there also 15-20% growth looks quite possible with the geographical expansion. We should, I should also mention that curriculum change frankly does not benefit Indianica business because we are in textbook business. So whatever textbooks that schools are buying, they will buy new type of textbooks when we come out with. But it does not really benefit the CBSE publishing business.
Okay. And so the 4,000 crores you're saying that's an India market revenue market or for only Maharashtra and Gujarat regions?
No. This is CBSE in any case we are selling across India, and 4,000 crore is India and Gulf, both put together, is the total market size for textbook market.
Yeah. But how much sales would be the Maharashtra and Gujarat, because that is where you are quite strongly present? That's the reason.
No. As far as India Nika is concerned, otherwise also that company since inception is in north, and major market for them is northern India and eastern India. So Maharashtra, Gujarat, it really does not matter to the India Nika.
And the reason for north and east is because of the origin of Encyclopedia Britannica. Am I right?
No, CBSE type of schools were maximum in those areas.
Yeah, got it. Okay, great, sir. Thank you very much.
Yeah.
Thank you. Next question is from the line of Jinesh Joshi from Prabhudas Lilladher. Please go ahead, sir.
Just one small clarification required. Sir, you mentioned that in the stationery export business, from 4Q onwards, there will be no revenue loss as you have shifted the manufacturing to a different location outside of India. So can you share where have we shifted this production to? And secondly, given the fact that you'll require a new setup as such, so within say 3 to 5 months, will we be ready with the setup to ensure that there is no revenue loss? And secondly, if you can also highlight which product are you referring to over here?
So to specific product category, because it is little sensitive from various angles, that I will not speak about. But we have shifted. We are almost on the verge of finalizing with an existing manufacturing setup in the neighboring country, and there also is being discussed at length, including commercial. So I would like to avoid giving the location right now, but it is in neighboring country.
Any incremental capex required for it? Would you like to share?
No, it is an existing manufacturing plant, so I don't think so. It will require incremental. A small couple of 2, 4, 5 crore worth of machinery he may have to invest in. That's it.
Sure. And sir, secondly, with respect to EdTech, I mean, this time around, you have refrained from giving any future outlook, so to say, with respect to quantification of losses and all. But how should one think through? Because, I mean, in FY23, the losses had magnified and we had a strategy to kind of go deep in EdTech, and now there has been a change of stance. So direction-wise, how should we think about losses? I mean, can we expect the losses to come up meaningfully in, say, 24 and 25?
So again, I'm repeating, Jinesh, just wait for some time. And let us, lots of research and market surveys being happening, and so let me come up with an exact answer very shortly.
Sure, sir. Thank you. No problem.
Thank you. Next question is from the line of Rajan, an individual shareholder. Please go ahead.
Yeah. Hello. Am I audible?
Yeah, Rajan bhai. Yes.
Sunil bhai, hope you're fine.
Of course, yes.
Yeah. Sunil bhai, may I have the liberty of asking a very straight question actually, because I missed a substantial part in the beginning. Sunil bhai, we ended 23 with 1,700 crores of revenue and a profit of about 204 crores on the consolidated basis. So this year, I had seen the last interview of yours on CNBC where you had mentioned that we'll touch a revenue of 1,900 crores for FY24 and 2,100 crores for FY25. So, is that achievable now in the current scenario?
So, I do not recall having said 2,100 for FY25, frankly, but 1,900 I had mentioned. And at console level, we are confident of achieving that number.
Achha. No, you had mentioned 15% growth on the top of that. So I assumed 2,100 crores.
Yeah, okay. No, we are definitely helpful, and fortunately all businesses have lots of opportunities, so we are very confident of growing at 15%.
Okay. So basically 1,900 crores is what I can assume for the current year, and then at 15% for the next 3-4 years, which you mentioned earlier in the conversation.
That's right.
Okay. And what about last question. What about the consolidated net profit? Can we expect it to be more than the last year? 204 crores is what we achieved last year. So will it be higher in the current year? And going forward also with 15% top line growth for next 3-4 years, can we expect a similar growth in consolidated profit?
I'm sure, we already have right plans to grow by 15% at least, and with that, each business though contributes different margins, but accordingly, it should grow in the same line. I'm very confident of that.
Fine, sir. Fine. Thank you so much. All the best.
Thank you, Rajan bhai.
Thank you. Next question is from the line of Manish Dhariwal from Fiducia Capital Advisors Private Limited. Please go ahead.
Very good afternoon, and thank you for this opportunity. I'm new to this company, so I had a very basic question. I wanted to understand the policies of the organization towards capital allocation, as to what are the key matrices that the organization works towards while deciding their capital allocation decisions.
So on capital allocation, for publishing business, we hardly require any additional capital in terms of fixed investments. More and more, with the increase in businesses, will require more and more working capital, and therefore we normally opt for bank borrowings only on a temporary basis. Stationery business, where we will have to invest more money now going forward because of huge opportunities both in domestic and in exports. So as a policy, you wanted to understand how much do we allocate for each business, is that right?
Yeah, and what are the criteria, meaning what kind of return expectation that you have, payback period expectation, what kind of, an organization like yours, which is like fairly well spread out in terms of its business heads and business areas, so you always have and businesses always demand money. So which business to get what allocation, which business to get what kind of money. So what are the criteria that you have, that itna mera hurdle rate hona chahiye, itna mera paybacks hona chahiye, on those lines. And if there are any other like qualitative aspects that you consider.
So each of the businesses would differ as far as payback period is concerned. But we should understand one more thing, that we never invest keeping in mind short-term benefits, because each business is, for it to stabilize, really takes long. So normally hurdle rate point of view, we always see that minimum 15% return we should get over a period of time, minimum that I'm saying.
Okay, so suppose if you're investing 100 crores, then your expectation is that at a PAT level, that sales, whatever happens from there, it should give you 15% PAT. Is that what I understand?
Yeah, whatever investments that we have, yes, that's right. But as I said, it may not happen in the initial year of investment every time. Yeah, but over a period of time, minimum that return we should start generating.
So this over a period, like could we say about 3 years?
3 years minimum.
Okay.
Post 3 years.
Yeah. Okay. So it cannot be that 7 years is being taken in terms of the gestation.
No.
Because the business is requiring that kind of you're seeding something new. So that is not in the...
Yeah, fortunately all our businesses really do not require huge capex, and therefore that worry is never with us.
All right, sir. All right. And so what is the borrowing policy of the company like?
Mr. Dhariwal, may we please request you to rejoin the queue if you have any further queries? There are several participants waiting for their turn.
It was just a follow-up, that from the investment. It's okay. Thank you. Thank you so much.
Thank you, sir. Next question is from the line of Karthik Gada from Multiple Wealth Management. Please go ahead.
Yeah. Hi. Am I audible?
Yes, you are. Please go ahead.
Yeah. Thank you for the opportunity. So you mentioned there was resistance from clients, from customers because of the hikes we have taken in the price of our books. But shouldn't the demand be somewhat inelastic? So how much has been the impact of the second-hand books?
Percentage-wise, of course, such data is never available. But because we were expecting better growth over last year, but we could achieve hardly 10-11% growth. And therefore, we believe the usage of second-hand books would have increased compared to earlier years.
Okay. But it was not the first time, right, that second-hand books were in circulation. So the behavior of, holding back on the purchases of new books, was that surprising? Because you would have taken price hike earlier also, right? So what went different this time?
No, price hike in last year would be the maximum in the life of Navneet, because in the history of Navneet, because we had never seen such price rise in paper industry in a short period of 6 to 8 months. And that could be one of the major reasons. Otherwise, I agree that this phenomena of buying second-hand books has always been there. But because of extreme price rise in various products, this would have happened. That is our belief. And here also we are doing proper survey as to understand what made people not buy new books.
Okay. So any insights on that, or is it still ongoing, the survey?
What is ongoing, you are asking?
The survey which you are undertaking.
Yeah, it is ongoing. It is ongoing, and it is by our own teams. So each and every retailer and the users, we are trying to go, mainly retailers and rather whole trade we are going, and trying to understand the real reasons which we can, if at all required, we can improve upon in subsequent years.
Okay. And can you quantify what was the price hike which was taken?
So last year, as I said, in Q3, Q4, when we started printing, we took price hike of around it's not a generalized percentage that we decide depending on the book to book, but between 12 to 15% we would have taken.
Oh, okay. That's it. Thank you so much. Thank you.
Thank you. Next question is from the line of Amit Doshi from Care PMS. Please go ahead.
Yeah, thank you. So, the CBSE business, the Indianica part, what is the rate of conversion of SSC schools to CBSE schools? Is there some numbers available on what is the rate? Because I believe that the growth that Indianica would see primarily from SSC to CBSE conversion of schools, that is the kind of rate of growth that I believe would be easier for us. So just wanted to understand that part.
So out of 70,000 SSC English medium schools, we are clearly seeing between 2,000 to 4,000. It is not constant every year. That number of schools are trying to change to CBSE. So that is one, the existing SSC schools converting to CBSE. Simultaneously, there are a huge number of new schools that have come up purely CBSE with CBSE affiliation. So both put together, we are clearly seeing between 4,000 to 5,000 new schools coming up in CBSE segment.
Okay. And second, sir, regarding this sale of immovable property, so we have good balance sheet, so as such nothing to any particular reason we are liquidating this asset, and of course it is sold to promoter group only.
Unfortunately, that location where this property is situated is declared as an affordable housing sector by the local authorities. So even if we, for expansion, even if we have to do major repairs or construct little more, we are not getting approvals. With that limitation, we had no option but we'll have to shift from here.
Okay. So we don't have any plan to sell any assets as such, just generally to generate cash or something.
No. Generally, we don't want to. Only idle assets we were selling, but in this particular case, because of the local authorities' restrictions, we had no other option.
Yeah. Okay. Thank you, and all the very best.
Thank you.
Thank you very much. Ladies and gentlemen, we will take our next question from the line of Himanshu Upadhyay from O3 PMS. Please go ahead.
Yeah, hi. Thanks for giving me another opportunity. This was related to Navneet publishing business only. So we have three segments: workbooks, textbooks, and guides. Okay, and every year our prescription of books in schools would be increasing in Maharashtra and Gujarat. Okay. Any targets we have in terms of increasing our prescriptions or schools prescribing our books, and the slowdown what we are seeing, or the volume means 10% lower than the peak, what would be the in these three, let's say workbook, textbook and guides, where would be the maximum lower volume and where the volume would be least impacted?
So, first of all, we don't sell textbooks in the state of Maharashtra, Gujarat. We just sell workbooks and guides. And, of course, third category is probable question set series. So, the impact that we are seeing, still the lower percentage that we are seeing over the peak level is in guides.
Okay. Thank you from my side. Yeah.
Thank you very much. Ladies and gentlemen, due to time constraint, this was the last question for the day. I would now like to hand over the conference to the management for the closing comments.
Yeah. So I take this opportunity to thank everyone for joining the call. I hope I have been able to address all your queries. For any further information, kindly get in touch with me or Strategic Growth Advisors, our investor relation advisors. So thank you, Jinan in particular, Prabhudas Leeladhar as well, for arranging this call. Thank you.
Thank you. On behalf of Prabhudas Leeladhar Private Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.